Hey everyone, this is Eric with Onramp Funds. Thanks for watching Create Something with Onramp. Today we're going to talk about the types of financing available to e-commerce businesses. When it comes to types of financing, there's really three categories you want to think about: your short-term, your mid-term, and your long-term. And each of these have specific use cases. One of the things that we see, and really we've been trained as Americans to think about debt, think about borrowing in terms of take as much money as you can get for as long as you can get. This is actually not the right mentality when it comes to running a business. Short-term capital has very, very specific uses. It actually de-risks your position. It's a quick injection of cash that is also then paid for very, very quickly, keeps your costs down, it facilitates growth. Mid-term and long-term capital have different uses. They're different investment uses, and you really want to think about those more in the long term, specifically about a mortgage, right? How would you buy a warehouse? How would you buy the office that your business is going to be in? Mid-term financing, when it comes to that sort of thing, is actually more really the lease you have on an office space or the lease you have on a warehouse that you don't actually own, but you only also have a 2 or 3 year commitment there. It's really critical to think about financing not as just funding your business in terms of so many e-commerce sellers think of funding as taking on an investor who's going to actually own a piece of their business. It's our goal here at Onramp to actually help you not have to have investors, to help you be able to bootstrap your business, use different short-term financing and mid and long-term financing available to you as an individual to help grow your business in a place that you continue to have control of that business so that you're creating the business you want, attaining the aspirations that you have, and really making the dreams that you have for this business and for your life and your family come true. Short-term financing, these are things like using your personal credit cards, if you can get a business credit card, using a business credit card to run a business. Advances, there are a lot of providers of advances out there. Onramp is one of those. We think we have one that's really purpose-built and ideal for e-commerce. And then bank lines of credit. It's our goal at Onramp to help our clients actually be able to graduate, matriculate into a bank line of credit. That generally takes somewhere between $10 and $20 million in recurring revenue because it's difficult for a bank to understand the risk associated with the e-commerce business. Really, the risk associated with any small business when it's emerging, because the banks only have so many employees and they're going to go chase the biggest deals they can because that's how they generate the revenue they get. When you're looking at short-term financing solutions, then it typically turns out to be the credit card is the #1 product. The challenge to the credit card is it doesn't match to your cash conversion cycle. If the average cash conversion cycle in an e-commerce business is running kind of 90 to 120 days, a 30-day required payment from a credit card, well, it's not 90 to 120 days, which then means you're either incurring interest expense, you might have that credit card maxed out, and now that funding is not available for the next 30 days or the next 90 days, which really then means you want to go look for something that's purpose-built for the e-commerce cash conversion cycle. Short-term capital is something that you're going to recycle throughout the year. If you take a 1-year loan and you use that to buy inventory that then is sold in 90 days, you're continuing to pay that loan down over 9 months after you've sold that inventory. Is there going to be then that short-term source of capital available to you to get the next round of inventory in? If not, you've got a problem. You're actually going to have to make payments with no inventory to go generate top-line revenue, hence no funds available to make those payments. So really, as we think about short-term capital, the critical thing here is to think about aligning the deployment and how much you take and how much you deploy with the cash conversion cycle so that then it pays down, and then when it's time to take more, that is available there for you. You will actually find that it is more cost effective to do that than to take one long-term loan, and it means that when you need the cash, it will be there for you as opposed to converting a short-term product into a longer-term payback. Midterm financing is things that are going to really run 1 to 2 years. The SBA loan program has some interesting midterm financing solutions available. This is for things like buying equipment, buying well, we have one e-commerce customer sells interesting kind of office supplies, still runs his business out of his garage, but gets enough inventory now in that he needs his own small forklift. That forklift is on a 3-year loan. This is like buying a car from Toyota, allows him to then make payments over time, not have to incur all that expense up front. That's a great kind of midterm financing solution for his business. It's going to help him continue to scale that business. And as he then moves into, outgrows his garage and moves into some sort of light industrial space, typically on the outskirts of town, and picks up 5,000 square feet so he can hold more inventory, take larger container shipments in at far deeper discounts from his supplier. That forklift is actually still going to be incredibly useful for that business. That warehouse, if he decides to buy it, that would then be long-term financing. How does he go get a 15 or a 30-year mortgage on that space and pay that over time so that he can reduce the expense there? Really, really critical then to think about what is the asset that your cash is being used for, and then really aligning short-term, mid-term, and long-term financial solutions based on that asset and what it does. Inventory is a short-term asset. You're bringing in your pens, whatever it is you sell in bulk, 10,000 of these. You're gonna go pay $1 a pen, so you need $10,000 out. You know that each of these pens is gonna sell for $10 a piece, but it's gonna take you 120 days to sell all of those pens. That's short-term financing. That forklift that you need to actually unload that freight truck and then break down those pins into shipping sizes you're going to send off to your fulfillment provider. That's midterm financing. That's taking just a vehicle lease or a vehicle financing. And then that warehouse where you're going to operate your business from, again, that's your long-term financing. That's your mortgage that you want to think about. So I think it's really important as a business owner to really break the cycle of thinking about most cash for the longest, to breaking it into what do I need this cash for? What's the optimal amount to take? Take the least amount that you need, pay it back as quickly as possible so you can reduce your cost around that, and then recycle that over and over again. Thank you for watching Create Something with Onramp. If you like this video, please subscribe to see more. We'll have more content for you coming soon.